Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. It was a very interesting choppy session yesterday with the fact that the market did stage a mild impulse to the upside after the Australian Bureau of Statistics, also the ABS known, released the Australian employment figures, which again rose in December along with the jobless rate, which surprisingly fell. The upbeat report should give some comfort to the central bank, that is the RBA, as the labour market remains one of the strongest parts of the economy. The figures from the Australian Bureau of Statistics showed a net 21,600 new jobs were created in December, down from an upwardly revised 39,000 the month before. But surprisingly, the market forecast of a 16.5% increase. The overall trend in the Australian labour market has been robust over the past couple of years, with the annual job growth of around 2.2%, which is faster than the 1.6%, that is, rise in the population. Full-time positions expanded by 2% in 2018. However, some details in the report weren't as impressive. With the full-time position that tends to offer higher wages and greater security declined by 3,000, adding to falls in November. And the Australian rate dropped to a 6.5-year low and touched in September and October, that is, of 5%. From a technical point though, as I mentioned, the Aussie did spike but didn't stay there very long and collapsed. And now from the fact my objective of 70.70, it did post a fresh 5-week low of 70.80 overnight. It is assessed that the door is still open to the downside and could crush the level of 70.70, and if so, would expose the next region around, I believe, at 70 cents as a buy zone, or is it? We have to reassess once we get down there before the call is made. But as I mentioned about my marriage, the MACD and the RSI is very much together and therefore should support my view and put pressure on that level, as I mentioned, of 70.70. Well, with the Aussie collapsing, the Euro did take a heavy fall as well and posted a 5-week low of 112.88. Overnight, the central bank, the ECB, or the European Central Bank, has widely expected kept interest rates on hold. And in terms of that, the Mario Draghi was somewhat dovish. From the decline, did post the US dollar to a fresh high after it reclaimed 96 and got to 96.35. With the level at 113.0520 struck, I am now neutral. I don't really have a view here, purely for the fact is that my objective from the fall has reached its target, but the RSI is also getting quite flat and a little bit of divergence. So I'd rather sit out now that my target's been reached, square my position up and reassess. Over 6 days, the dollar-yen has failed to stage any significant moves, and also is capped from the level of 110.2025. It is viewed that with the RSI still remaining slightly vulnerable, could see a further down test. Therefore, could see a move towards 109.15 or down to 108.45 before the given call to a buy. Until we get some kind of initial move to the upside or clearing 110.2025, then I believe the market has found a top for now. After the doji, the market is now pressuring this level 131. To me, the fact is how short is the pound? I believe that the market went heavily short into Brexit, and therefore this is the reason why we're getting a bit of a rise here, because the market is short, and at the moment travelling in this uptrend looks towards 131.2040. I did suggest around 130 to 131 as a sell zone, but above 131 my stop will be around about 131.46, so around where the resistance is. Reason behind that, I can't step in front of this bullish move and therefore could easily see maybe further tests if the market is incredibly short. Support at this stage is around 130.5. On the gold, still maintaining and holding above the foundations of 1,270 to 74. It is assessed from a technical point that we could still see a test to the downside, but I'm a buyer. I'm not bearish, and I think the market can actually stage a rebound and look back towards the top side around 1,300. So still look to buy dips. And finishing off with oil, well, the market staged a rebound off the neckline around this level of 52 and now looks further to the upside and could see a rise up to $55 a barrel. Until we get a break beneath 52, figure 45, then I am still bullish and still support this neckline with the head inverse head and shoulders. That gives me a target to 55 and higher. So let's see how it plays out today. Well, that wraps up for today and for the week. Thank you very much for joining me. I hope you have a wonderful day and a great start to the new weekend.